Hello guys, welcome to today's session in Quantsapp, and today I'll be talking about how you can build a winning mutual fund portfolio. But before starting the video, if you're new here, you can go in the description. There is a link of Quant Wealth application. You can download the application from that link. After successful registration, you will get some free tools that you can use for your investment journey. Also, in the application we have a video library. So in video library we have made multiple videos on various strategies that can help you out in your investment. Okay, so you can watch them. They are available in multiple languages, for example English, Hindi, Gujarati, Marathi and Tamil, right? Now at any point of time, if you feel like you are having any kinds of doubts or query, so you can contact us. You will get the number here in this section, okay, and we will be there to sort your queries out, right? So let's start today's video, that is how to build a winning mutual fund portfolio, right? Now for that, let's see. So that is the introduction, the overview of mutual fund and their importance in personal finance. Okay, तो ये benefits है, diversification, professional management. Okay, ये सारी चीजें हम अभी पढ़ने वाले हैं. Okay, let's see. So step one, to define your investment goals, right? If you wanna make a mutual fund portfolio that will be a profitable and a winning strategy for you. So first of all, you have to define your goals, right? Either you are going for the short term, either you are going for a mid-term, or you are going for the long-term investment, right? And on the basis of that, you can make your portfolio, right? So for that, for example, you are going for the short term, right? So you can go with the IDCW. So I'll write it here. Just a second. Okay, for example, if you are going for the short term, okay, you have some goals. For example, short term, you want to buy a car in upcoming months. Okay, so for that, what you can do, you can go with debt funds also. Okay, debt funds also. Okay, or you can go with the IDCW that will provide you a regular payouts in some intervals. Okay, if you want to go for the long term goals, okay, so then you can go for the equity ones also. Okay, equity funds also you can go with, and you can go with the growth funds, right? And similarly you can do the SIPs at a regular interval of time. Okay, and these will all of these should be done as compounded basis, so that it will increase your capital, it will increase your profit, okay, year by year, right? So this is the thing. Now aligning risk to tolerance with goals. Okay, now if you are doing investment, so you should be very much careful about the risk. You should know about your risk profile. If you are able and ready to take the more risk, okay, so more risk will be able to provide you more returns in profit, right? But if you don't want to take that much risk with your capital, okay, then you have to be satisfied with the moderate returns. Okay, so for example, if someone is ready with the more risk and more returns, so he can go with the small caps, right? He can go with the small caps. In these, they are the aggressive ones. Okay, so here the aggressive investment can be done. It can provide you good returns in market, but at the same times they are a little risky because they get impacted by the market volatility. Right, in comparison to if you will go with the mid cap and large cap, so they are less volatile with the impact of market, right? And as well as they provide you moderate profit with moderate risk, right? So you should be well aware about your risk profile. So that was the thing. Okay, now importance of having a clear and achievable target. So your target should be clear, like I am working for this much of profit, right? For example, you are working for the 15% profit, that is achievable. But if you want to go for the 35% profit or 40% profit, so that is not a realistic approach in the market. Maybe you can get it, but there are very rare chance, and there are chances that you can also lose your capital in hope for this returns, right? So that was the thing. Okay, now let's see. Okay, so then we have know the types of mutual funds, right? So we have some different kinds of mutual fund here. For example, equity mutual fund. Okay, now in equity mutual fund we generally talk about the, you can say, the stock indices. Okay, stock mutual funds are included in this. Okay, so these are the mutual funds which can provide you good growth, but they are very much impacted by the market volatility. Okay, for example, you are investing, you have a mutual fund with the IT sector. So if any news or if there will be any negative impact in the market of IT sector, so it will directly impact your mutual fund also, right? In the debt funds, we are talking about, in debt funds, we are talking about treasury bills. Okay, we are talking about treasury bills. Then we are talking about commercial papers as well. Okay, we are talking about commercial papers as well. Then we are talking about bonds as well. Okay, so there is a low risk of your capital, right? So low risk, but it is capable of providing you good result at the same time, right? Then we have the hybrid funds also here. Okay, now hybrid funds, it is a combination of your equity plus debt funds, right? Combination of equity plus debt funds. So if you have 100% capital, for suppose, okay, and you can, what you can do, you can just invest 60% in debt funds plus 40% in equity funds as well, right? So if you want to invest your capital in both the funds, for example the debt and equity, so then you can also go with the hybrid funds, right? So that was the thing. Okay, so let me clear it. Now we have the index funds and actively managed funds. Okay, so you must be known about the fund manager, right? So they are of two types. So let me write it here. The first one is of active type, okay, and then there is a second one is of passive types, right? In active ones, what they do, they just continuously buy and sell your investment, your mutual fund. Okay, so there will be so much buying and selling as per the market. Okay, there will be so much research going on. Okay, so your portfolio will be managed very actively, and that's why it require more money as well. And what is their target? They want to achieve more returns than your index mutual fund, right? So that is what they are doing here. So for example, as you have known, the for example, the annual return that the Nifty gave me was approximately 26%, right? So these actively fund manager who are working actively, they want to achieve more than 26%. Okay, more than 26%. But in passive ones, the fund manager who are working passively, they will not go with that much research. There will be not that much active buying and selling. So what they prefer, they will replicate the performance of Nifty, and if they are getting 23 or 24%, so they are satisfied with it or they are happy with it, right? So this is the difference. Now talking about active and passive ones, it will require less expense charges. So there will be less expense charges because of there is not that much of management. But in active ones, there will be maximum expense charges that you can see. Okay, so this was the difference about active and passive mutual funds, right? Okay, now let's go ahead in the next PPT. So then we have the diversity of your portfolio. So you must be known about for example, if you are going with a mutual fund, right? So there is so much diversification because, for example, if you are taking a, just a second. Okay, so for example, this is your portfolio, right? And you must be doing with the hybrid fund. You must be doing your investment with the hybrid funds, or you can say small caps, or you can do in large caps also, right? So there is so much diversification. So for example, if there is some volatility in the market, right, the market is in bearish direction or in bullish direction, it will not impact your portfolio that much because you are having so much of stocks of different kind. For example, some stocks of IT sector, some stocks of FMGC sector, right? So if there will be a negative news of IT sector, right, it will not impact your portfolio because it will be averaged out by the FMCG, or you can say by the infra sector. So overall your portfolio will be averaged out and you will not face that much losses here, right? So this is the beauty of diversification here. Okay, let's go with next PPT here, right? So assess fund performance. Okay, now when you are doing investment, okay, and especially in mutual funds, so what happens, you have to see the past performance, okay, because there are so much chances that a mutual fund or a fund manager, what it will do, it will replicate its past performance. Okay, that is why we see the past performance of stocks also, right? So that was the thing. Now you have to go with the expense ratio also and the risk adjusted returns, right? Now if I tell you about the taxes that is included in various kinds of mutual fund, right? So for example, we have some entry load. Okay, entry loads, or you can say the charges. Now these entry loads have been removed by the SEBI. Okay, they have been removed by the SEBI. So now you only have exit load when you take out your returns. So at that time you have to pay your exit loads, right? Then the second thing is that the expense ratio that we have talked about. Okay, so the expense charges, you can say, and these expense charges can vary from 0.4% to 4%, you can say, approximately. Okay, you can check it again, but it is approximately 4%. Okay, then there are various taxes also. Okay, so these are also included. So whenever you are going for the mutual funds, you should always be aware about these charges as well, right? Okay, now the role of benchmark comparison. This is a very important factor, because whenever we are comparing the performance of any mutual fund, okay, so generally we take the benchmark of index mutual fund, right? And we see the performance of this. So for example, right now, just now I have told you, right now the last year performance was approximately, index mutual fund was approximately 26%. Okay, so we compare, the role of this benchmark is that to compare your performance of your mutual fund with this benchmark, right? So that is what makes it a very important thing, right? You should always compare the returns and the performance of your mutual fund, of your portfolio, with this benchmark that is given here, right? Because it consists of so many stocks, right? And if it is giving you a good returns, and at the same time your portfolio is not giving you a proper returns, so what you can do, you can just change, you can just make some adjustment. Okay, that will include some charges, but still at the end of your time deadline of your investment, you will get a good returns, right? So that is the thing that you have to keep in your mind. Okay, now keep an eye on the fees and expenses. So we just talked about this, okay, the impact of expenses ratio and the front end and back end loads, okay, and then the choosing low cost funds for the better performance. So we just talked about this, so let's skip this one now. Okay, then we have the rebalance your portfolio regularly. How you can rebalance your portfolio? Okay, so rebalance is very important. How we can do so? For example, you are paying a SIP, okay, and for example 500 per month, right? 500 per month. Now you are paying this SIP every for example every second of your month, right? For example, if it is January, so on the January 2nd you paid your first SIP, then on the February 2nd you paid your second SIP, and it will go on, right? But you don't know at this time, when you paid your second SIP on February 2nd, you don't know if the market was at the highest point or at the lowest point, right? And it makes a difference, because if you would have made your investment at the lowest, so the market would have given you a good result when it went upward. But if on the February 2nd the market was already at its highest and you paid your SIP here, you made your investment here, so now there will be a negative impact on your returns, because the market will now move downwards, right? Because at that time when you made the investment, it was already at its peak, right? So you should always make adjustment according to the market. You should always do the research for your portfolio. Just make some adjustment time to time, okay? And there are some good fund manager that will help you out. They are the professionals, so you can take the help of them, right? So it is all written here, right? Okay, now let's see what is ahead in next PPT. Okay, stay informed and updated. So for this, what you have to do, just go through the news, okay, कि क्या क्या चल रहा है. If there are some bills and regulations that has been created by the SEBI or by the government that will impose any impact on your mutual funds or not. Okay, तो इस चीज पे भी ध्यान रखिएगा, if they are having an impact on your investment or mutual fund or not. Right? तो ये एक चीज है, you should always be updated about these things, these laws and market changes also, right? Then monitoring mutual funds holdings. Okay, so you should always be monitoring your mutual funds holding, if they are providing you good returns, how much returns they are providing. Okay, then if they are also providing you some dividend or not. Okay, so if there is dividend or not, if your dividend is given to you in your account, or is it recompounded again. Okay, so you should always be aware about these things also, right? Okay, let's go ahead here. Okay, now we have the conclusion. So summary of the key points. So for example, if I'll summarize all the things that I have taught you till now. So first of all, if you are going to make a strategy for your portfolio, a winning portfolio that if you want to make, so first thing, just clear your goals. If you want to do the investment for a short term or for the long term. If you are going for the long term, just take those mutual fund which are providing you a consistent returns, not a very aggressive returns, but a consistent returns, and having a low risk because you are holding it for the long time, right? When you are going for the short time, just choose those which can provide you a good returns. Okay, they might be risky as well, okay, but not that much risky. Okay, and for that, to avoid those risks, what you can do, you can just choose the diversification, so that if there will be a volatility in the market, it will not impact your mutual fund portfolio that much, right? अपने goals को define करो, just time horizon को डिफाइन कर लो. ओके, देन मेक स्ट्रेटजी, कीप रिसर्चिंग, पोर्टफोलियो को एक्टिवली मैनेज करो, जस्ट स्टे इन टच विद योर फंड मैनेजर एज वेल, राइट? इफ यू आर गेटिंग एनी न्यूज अबाउट द चार्जेस एक्सपेंस रेशियो, ओके, जस्ट वैलिडेट देम. एक बार वैलिडेट करो विद योर एप्लीकेशन, जो भी आपका फंड मैनेजर है उसके साथ. ओके, एंड दैट इज हाउ यू कैन क्रिएट अ वेरी गुड इन्वेस्टमेंट एंड यू विल हैव अ विनिंग पोर्टफोलियो विद यू, राइट? सो आई गेस गाइस दैट वाज इट फॉर टुडेज वीडियो. आई होप आप सभी को ये जितना भी मैंने बताया ये सारी चीजें समझ आई होंगी. इफ यू लाइक द वीडियो, यू कैन जस्ट कमेंट अस डाउन, जो भी आपको अच्छा लगे. लाइक कर देना एक बार वीडियो को. इफ यू आर न्यू टू द चैनल, यू कैन सब्सक्राइब इट. थैंक यू सो मच फॉर योर टाइम. दिस इज योर ट्रेनर अंकित सिंह रावत. हैव अ वेरी गुड डे.